Investors appreciate the idea of buying stocks and holding them for the very long term or even forever. The reason being is that it takes away the need to constantly update your portfolio, make buying or selling decisions. Buying them and just letting them grow is an ideal strategy for those of you that are busy, that may not have the time to constantly evaluate stocks, buying and selling, and trying to time the purchases and sales of stocks. And that's understandable. Following stocks can take a great deal of time. I know it takes a lot of time for myself. I spend 60 to 75 hours a week, sometimes more, evaluating stocks, but this is my profession. I wouldn't expect someone that's not in this profession to be spending that kind of time evaluating companies. So, in that sentiment, in this video, I'm going to highlight three excellent stocks you can buy now and hold almost forever and decades to be sure. So, without further ado, let me share with you these great long term investments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
The first very long term investment I'm going to share with you here is Colgate-Palmolive, the home goods company, the consumer staples company. People buy items from Colgate-Palmolive for their household and they replenish them regularly. It has a long history with consumers building brand loyalty. So the proprietary discounted cash flow valuation model I've created for Colgate-Palmolive also demonstrates that this stock is undervalued at current market prices around $86. The present value of all of the free cash flow I expect this business will generate between today and the very, very long run is over $127 billion. The company generates healthy free cash flow, which totaled over 3.5 billion in 2024. The company also boasts a very low discount rate, a very low weighted average cost of capital because the riskiness of the business is less than usual. People will continue buying Colgate-Palmolive products regardless if they're expecting a promotion at their job, or they'll probably even continue buying their products if they remain unemployed for a short amount of time. During longer trends of unemployment, you may experience some declines in the purchasing activity of Colgate-Palmolive products and a shift into more store brand products. But over the longer term, sales of its products remain relatively stable during booming economic times and during economic recessions. So that's why the weighted average cost of capital is relatively low. So the value of operations, you add to that total the company's non-operating assets and subtract the debt, and you arrive at the value of equity, which I calculated to be over $120 billion. And then I divide the number of shares outstanding for this company to arrive at the intrinsic value per share, which I see as the fair value for the stock, a price where I would feel like it's a fair price to pay at $148. Well, you can buy Colgate-Palmolive stock at $86. So in my opinion, you can buy this stock today well below the fair value, meaning that for me, it's an undervalued stock. And the next stock I'm going to highlight as one that you can buy today and hold forever is Mastercard. And I've run a similar calculation for Mastercard stock using my proprietary discounted cash flow model. And I calculated the present value of all of the free cash flow I expect this business will generate between today and the very long run to be over $491 billion. Mastercard generates very healthy free cash flow, which totaled over $11.9 billion in 2024. The discount rate or the weighted average cost of capital for Mastercard stock is also relatively low at 10%, not as low as Colgate-Palmolive, as Mastercard's business is more sensitive to economic activity, but still low relative to the average stock in the S&P 500 index. The present value of operations, as I talked about, over 491 billion. We add the company's non-operating assets and subtract the debt to arrive at the value of equity of over 484 billion. Divide that by the number of shares outstanding of over 897 million, and we arrive at an intrinsic value per share for Mastercard stock at $540. The current market price is $597. And when I apply the margin of safety, Mastercard stock looks, you can say, fairly valued or slightly overvalued at current market prices. But Mastercard is unique in that it's one of those Hall of Fame businesses where it has strong competitive advantages. It operates in a massive industry and has generated operating profit margins close to 60% for a very long time. It also provides investors with a amount of protection against inflation because Mastercard's revenues are based on a percentage of transaction values, and if inflation is increasing, then the overall sum from which Mastercard generates a percentage from revenue increases as a result of rising spending, nominally speaking. So for those reasons and for the longevity of Mastercard's business and potential for the long-term business, I can recommend this as a business that you can buy now and hold for decades or even forever. In fact, Mastercard is a stock that I've owned for several years and plan on holding for several years more. Right. And last but not least, CVS Health Corporation is another stock that I think you can buy now and hold for the very, very long term. CVS Health Corporation is one of the largest healthcare companies in the United States, and it generated over $4 billion in free cash flow in 2024. CVS is shrinking its footprint of physical locations as people are visiting brick and mortar locations less frequently. But even at a smaller size, CVS Corporation can still generate robust free cash flow. As I'm forecasting the present value of all of the free cash flow this business will generate between today and the very long run to be over $181 billion. The discount rate I've applied here or calculated is just under 9%, and the value of equity totals over $108 billion. And when I divide that by the number of shares outstanding, I arrive at an intrinsic value per share for CVS Health Corporation at $86. Current market price is just a little over $71. So not only is CVS Health Corporation a stock you can buy and hold for the very long term, but you can also buy CVS Health Corporation stock at a price well below the intrinsic value per share or the fair value per share calculation in my spreadsheet. By the way, you can get access to these discounted cash flow valuations I've calculated for over 200 companies with a channel membership at the investor tier or above. See the link in the description for insights into all the membership benefits, and this is just one of them. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.